Good day, viewers. My name is Ruth, and welcome to yet another informative episode of Analysts Insights, a show where we discuss anything business, finance, and investment. With me today, I'm joined by Rufaro and Ranga. Welcome, gentlemen.
Thanks, Ruth.
Thanks, Ruth, for having us.
In today's episode, we will try and get views on a number of developments that occurred in the economy and the markets. My first question is directed to Rufaro. Recently, we have seen COVID-19 cases going up and additional restrictions were introduced. What's the economic impact of the recent precaution taken?
So the lockdowns, and lockdowns in general, or restrictions, are bad for business because it affects, for example, right now, all the restaurants and bars are not open for sit-in patrons, and this is where they make the bulk of their income. The takeaways are not enough to cover their bills. So a return to restrictions of this nature is generally bad for business and bad for the economy. So obviously, on the other hand, if we see a significant surge in hospitalizations and deaths, that will also have a more severe impact on the economy in the longer term. So it's a function of, or the question really is, which is the less of two evils, to have these restrictions so that we don't have a surge in hospitalizations and deaths, or so the question really is what's the correct balance, and we don't really have good information in terms of what's happening with the incidence of cases on the ground, so we can't really have an opinion whether the restrictions we're seeing, are they going far enough or they're going too far?
Maybe I can just add there. My view is, I think it was good. We needed to be proactive after experiencing the first wave, the second wave, and also maybe an expectation that a third wave was going to come. I think it was necessary that precautions are taken a bit quicker. You don't want to wait until the numbers of infected people has risen to levels that are beyond what you can control. And also, obviously, there are some lessons learned from the previous two episodes, previous two instances of these infections. I think one of them is to say you can restrict certain high risk areas, but not necessarily close the entire economy from working, because obviously it also then brings other problems to do with the livelihoods of people. So I think it's important, and also with what we have seen in other countries where this wave third wave actually came quite aggressively. It was only sensible that at any slight signal or indication of numbers rising up again, we would actually get into a cautious mode. So look, what it means for the economy, it's obviously it means a lot, but I think for now you have to choose between survival, like human survival in terms of being free from the virus, versus maybe our economic needs. Obviously, sometimes it's very difficult to draw the line, but at this point in time, when you're faced with a pandemic, you want to make sure you preserve yourself first and then think about the economic implications later.
Okay. Before the pandemic hits, we are already seeing the opening up of airspace with more airlines coming into the country. How are these developments going to impact the hospitality and travel industry and the economy at large?
Yeah, so I think it's definitely a net negative for the hospitality industry, because tourists, if they come through to your country, they want to be able to go out and explore the local culinary experiences, which is not possible at the moment because the restaurants are closed. So notwithstanding that the skies were open for these airlines to come through, the traffic is going to dry up because of these restrictions. So I think from a tourism and hospitality standpoint, it's definitely a net negative, but I think it's a short-term affair. I think that 2 to 3 weeks from now, we'll probably see some sort of return to normal, and that sector will pick up and recover.
Okay.
Yeah. So my view is, I think the key is on vaccinations. So at some point we'd actually recorded some very good take-up of the vaccines, and with what we have seen in some countries that are beginning to open up, I think they've managed to do that on the back of good numbers of people that have been vaccinated. We are seeing in some European countries where for the first time fans are now allowed in football stadium for the simple reasons that they are vaccinated. And you need to get to a point where you've got herd immunity as a country for you to start feeling more comfortable. And I must say, I think there's been some improvement in terms of the general take-up, and also people dealing with the myths that were associated with the vaccine. And it's just a case that we hear right now that maybe the vaccines are in short supply. But the long-term impact of COVID and whatever mitigation is going to be predicated on how far we ramp up vaccinations again. And because I mean, from the way I look at it, it seems like this thing is going to be around for quite some time, and without any vaccinations, we will see even another wave and another wave. So I think that's the only solution, given what we have seen with other countries that are beginning to open up again.
Okay, thank you for that. We'll now be taking a short break, and we'll join you for the next segment. Welcome back. Moving on with our discussion, let's look at the markets. Ranga, Delta published its financial results for the year ended 31 March 2021. Can you comment on the company's performance for us?
Thanks, Ruth. So the Delta numbers are always anticipated in the market, obviously, because it's the biggest company listed on the Zimbabwe Stock Exchange. And obviously, analysts would want to know what would have taken place with that organization. So I think some of the major highlights from those numbers are things that we were expecting. With COVID, there were a lot of restrictions, and restrictions in terms of movements and also gathering and socializing of people. So obviously it affects the business that Delta does. So when pubs are not open, when bars, when nightclubs and other joints are not open, it means even the consumption of beverages is also going to be affected. But they actually saw some significant improvement in Q4 of 2020 when the lockdown measures were sort of relaxed. So I think most of the volume recovery that they experienced actually came in that quarter. And also another feature of their numbers is the impact of US dollar revenue or US dollar sales, which were about 50% of our sales in the business, which is quite significant. And what those revenues were able to do was to give them US dollars for their working capital needs, and also some capex needs that they had. And then when you look at the specific portfolios, the sorghum business was badly affected for the simple reasons that the main customer for the sorghum business is based in the rural areas, and there are issues to do with accessibility. Usually in the rain season, most of the roads will be in bad shape, but also just the whole issue to do with the disposable incomes of some of the rural folks after going through like 12 months of lockdown of one sort of one or another. And I think beyond the numbers or beyond the reporting period, the major issue right now has been the impact of the SI 127 of 2021, especially as it relates to the impact that the instrument is going to have on US dollar sales. And there were worries, obviously, in the early part of that announcement where prices were actually adjusted upwards in US dollar terms, and what it means is the demand was going to be affected. But I think there have been some recent improvement, recent changes that we think maybe will be positive for the likes of Delta. And investors like Delta because of its reach, because of its portfolio of products that are covering every aspect from sparkling beverages, alcoholic beverages, and even that in those different segments, they pretty much cover all economic sectors of the economy, from the low income, if you're looking at sorghum, to all the way to the high spenders with the green bottles. So it's the kind of numbers that were expected, but they speak to the things that we already know, that COVID had such a big impact on businesses.
Okay.
Yeah. So I think the outlook for Delta was quite negative when SI 127 of 2021 was initially announced, because what it meant was that all their US dollar denominated revenue was going to dry up, and they would be unlikely to be in a position to meet their import requirements. The auction would not be sufficient. But the business community since engaged Treasury and the central bank after the announcement of SI 127, and the restriction to US dollar discounts was lifted, which means that Delta can sell its products in US dollars at similar pricing to before SI 127, which was compelling to the market. So the outlook, because of this adjustment to SI 127, the outlook for Delta is now much more positive. They can still generate up to half their revenue, perhaps even more, in hard currency, and meet all the import requirements. So I think the outlook from an investment standpoint from Delta really did a 180. In just 1 week, it was very bleak. Initially, after the announcement of SI 127, meant that you couldn't sell products at a discount in US dollars. And then a few days later, after engaging Treasury and the central bank, that was changed. And so the outlook is still quite bullish for Delta. And we think that it's one of the stocks that whose valuation is close to fair value, if not below.
Okay, thank you for that. Moving on, Padenga is planning to seek shareholder approval to delist from the ZSE and move to VFX. Rufaro, please share your views on that.
So I think from Padenga's perspective, it's a business that is growing, and one of the advantages or incentives for companies to list on the Victoria Falls Stock Exchange is that they will have 100% retention on incremental export revenue. So Padenga, in both their crocodile business and in their mining business, have significant expansion plans. They plan to grow their exports, and therefore they would immediately benefit from the higher retention that would arise from listing on the Victoria Falls Stock Exchange. So I think if one, from the perspective of the controlling shareholder who has a long-term investment horizon, this makes sense to take advantage of high retentions and the impact that this will have on the bottom line. I think for a lot of the minority shareholders who liked Padenga because it was liquid, they could buy and sell it quite easily. This might present a challenge because the VFX is a US dollar denominated exchange, and access to US dollars and the capacity to trade US dollars is not something that's available to everyone. So I think some of the minorities might not find this development attractive, but I think for any long-term shareholder, there's going to be value creation from the higher retention, and this is what has motivated the board and management to move to take advantage of that and to delist from the ZSE and list on the VFX.
Yeah, if I can respond, thank you. I think for supporters of the VFX project, this is positive in the sense that we're going to have another listing on that bourse. I think that has been one of the problems or the failings of the that boss, that it was failing to actually attract listings. And I think credit to the ZSE team that has been doing some roadshows, trying to convince some more companies to list, obviously, on the VFX. But it means, obviously, we are depleting the listings on the ZSE just to prop up the Victoria Falls exchange. Maybe it's expected that after seeing these listings, some companies who are exporters, who are generating most of their revenue in US dollars, which is what the VFX is for anyway, would actually be encouraged, if not prompted, to also consider listing on the Victoria Falls stock exchange. So I think from that aspect, and also when you look at Padenga, it's you've got the crocodile business and also you've got the mining business. I think one of the stories that has been put across as maybe justifying the creation of something like a VFX was, we have got a lot of significant mining businesses in this country, and most of them, of the big ones, are not listed on our local exchanges. And I think from their point of view, it wasn't making sense for them to be listed on the Zimbabwe Stock Exchange, because they were not, it was not a platform where they could raise capital in foreign currency. Now the VFX is there, so who knows, maybe at some point Padenga, as their mining business expands, it might actually be spun off and be listed separately. And I think the ZSE can actually use that as a way to lure some other mining businesses to come and list on the Victoria Falls exchange. But yeah, the issue, the worry for me is the lack of liquidity on the market, given that it's going to be a US dollar market. And when you look at the profile of the local institution, they don't have any US dollar revenue or US dollar cash flows that they can invest on the market. So I think the same problems that we are seeing with Sitco listing, where there's very little activity, it might actually be, we might see the same on Padenga. And so when you probably ask the promoters of this whole transaction to say, what's the motivation? I think the motivation, like what Rufaro says, is just for them to take advantage of the incentives. I don't think their minds are fixed on the tradability of the shares on that bourse. It's more like, okay, let's get the maximum value from the incentives, and then we can then see what comes on after that. So it's certainly not. It might be a cause for concern for the minority shareholder if your company is going to be listed on an exchange that has got limited tradability. But you never know, this could be just the start of more listings on that exchange.
Okay, thank you very much for that. Before we conclude the show, can both of you please give us a brief comment on any other developments that occurred in the market over the past week? Rafael?
Okay, so we over the last week we saw a significant transaction in FBC, where the holding company bought a significant stake from one of the foreign shareholders and is now holding those shares as treasury. And this is basically the continuation of a trend that we've been observing for the last 18 months, where foreign investors have been exiting the market. And I think the sale of these shares to the holding company is part of the exit of yet another foreign shareholder. And it remains to be seen whether they will cancel these shares or place them with another foreign shareholder. But from what we know at the moment, we look at this as a net negative for the market, because it's yet another significant foreign shareholder exiting the stage.
Okay. Thanks, Ruth. So again, it's all issues to do with policy, especially the inconsistency of policy in this economy, where generally we have seen a flow of capital out of the economy, out of the country at a time when we actually need it the most. I think maybe you don't need to look far in terms of the extent to which policies are actually impacting businesses. SI 127 of 2021 is one of them, that after its announcement, there was chaos, there was commotion in the market, especially regarding the pricing of commodities in US dollars. So all of a sudden, retailers were forced to adjust their US dollar prices by as much as 34% to try and take into consideration the auction rate into their valuations, into their pricing, although the Zim dollar prices were not changed. So just one announcement, it just changes everything. And I think as part of the developments, like since you have asked about it, I think the changes that we've seen with the SI, not the SI proper, but how it's going to be implemented, I think it's, you could say some positive development to the extent that is now allowing the businesses to be able to price correctly in US dollar terms. So the recent changes are just saying, okay, it's by implementation is going to be limited to maybe 3 key issues. One of them is to do with the abuse of the auction system by some players who are just going there with maybe whether it's fake invoices or to get currency, which they'll then use on the power market. Then the second issue is to do with the manipulation of the rate itself, or for people who are maybe participating on the power market, manipulating the rate. And then the third aspect is on the anti-money laundering aspect. So the whole issue about you can't offer discounts and etc., it looks like it has been put aside. But then, I mean, the SI is still there. They've just chosen to freeze certain aspects of it. And again, it speaks to the whole issues to do with policy, how some of these policy announcements are just being made probably without consideration of what the impact of those policies will be on businesses. So if one was to make a request, maybe they would say, look, there's need to have some policy consistency, and if something is not broken, don't try and fix it. The dual pricing was working very well, and I mean there's evidence from the likes of Deltas that were telling us that they were getting as much as 50% of their revenue in US dollars. Even the ones that are not generating that much US dollars, they are, for example, okay, we're saying they didn't generate much, but still whatever they collected in US dollar terms was enough to cover their working capital needs and also to cover their capex needs. So if only we could have a policy environment that is sort of stable, predictable, I think that would help businesses grow and also contribute to economic progress for this country.
Thank you very much, gentlemen, Rufaro, Ranga, for sharing your views on these interesting issues. And to our viewers, thank you for staying tuned. Please send your views and comments on our Facebook page and YouTube channel using the details displayed on the screen. Thank you.